With all the turmoil from the trade war, the lack of consumer confidence, and the turmoil from the protests, can this market actually have a V-shaped recovery? Yeah, I think you probably can. Let's dive in. My name is Brian Cannon, and welcome to Markets in 5. Obviously, there's a lot of noise in the marketplace, but what we like to do is take the weight of the evidence approach. We want to look at everything from a technical perspective to say, is it heading in the right direction or is it not? And so I've got 4 charts I want to walk through with you today. First one here is the S&P 500, and you can see that certainly we've had this pull down as a result of the trade war. But look at that. We've had a really strong V-shaped recovery so far. So we're almost all the way back to all-time highs. It's really hard to believe. So if you turn on the news, you would never ever guess that that would happen. So again, a lot of noise out there. But from a technical perspective, everything looks really good so far. So RSI is back above 50 and trending up there very nicely. We've broken back above all of our moving day averages. So now the price of the S&P is above its 20-day, its 50-day, its 100-day, and 200-day moving averages. And we've had a lot of golden crossovers, meaning that the 20 is crossed above the 50 and above the 100 and the 200. So those are all very positive events for us. And MACD down here, get out of the way, MACD is also above 0 and in the positive territory. So all very good news so far. So if we take that same chart, blow it up, zoom it in a little bit, again, it just kind of shows you RSI is certainly trending up. It's above the 50. Anytime RSI is above the 50, the market's trending up. Anytime the RSI is below the 50, it means the market's having some turmoil, some trouble. So again, everything looks good. Again, we've had a crossover here of the moving averages. Everything is starting to point up, which is good. So when the averages are pointing down, that's not good. When they're pointing up, that's good. And again, MACD is heading the right direction. So you can see that, that it really is shaping up to be quite positive. And when we look at the S&P 500 here in the bottom, so it's the black chart. This is just the straight up S&P 500. And you kind of see when the trend breaks and it breaks out, it broke down, it's broken out and headed the right direction. So that's good just from an S&P perspective. But then when we take the S&P chart out of it and we just run the 5-day moving average relative to the 100-day moving average, anytime the 5-day moving average is above the 100-day moving average, it means the market is headed in the right direction. And anytime it's below, it means the market's headed in the wrong direction. So you can see here when the market, when the 5-day broke below the 100-day, as a result, the market was in tough trouble, right? So when it broke out, started heading up, you can see that everything's trending the right direction. So during the the tariff war, certainly the market broke down, broke trend, and the 5-day moved below the 100-day moving average. Well, it just recently broke out above it and is heading the right direction. So again, this is another bit of evidence that we would look toward to support our theory that the market is in a V-shaped recovery and has more room to run. And the last chart here is the S&P 500 on a weekly basis. So it kind of takes some of the day-to-day noise out of the trend and looks at it on a more long-term basis. And then when you pair that with the 40-week moving average, anytime the weekly S&P number is above its 40-day moving average, again, it means that the market is headed the right direction. And anytime it's below it, means the market's having a tough time. So again, when you look at that, you can see that obviously when it's below its 40-week moving average, usually RSI is below 50. When it's above it, RSI is above 50. So again, just other ways to kind of look at this. Same thing with the MACD down here. Get out of the way. You can see that anytime the MACD is below its 0 level, the market struggles. Anytime it's above it, means the market's typically trending and doing the right thing. Now we've had several pull downs over the last several years, and so when we break down below the 40. Question is, how far does it dip and when does it recover? And what happens after it recovers above its 40-week moving average? Typically, after it recovers and breaks back above it, usually it's got room to run. Had a breakout here and it ran, breakout here and it ran, breakout here and it ran. So here we are, we just broke out Again, RSI in this measurement is back above 50, and the MACD down here, get out of the way, is back above 0. So again, everything is supporting the fact that this is a V-shaped recovery, and that we've got more room to run. It doesn't mean that we're going to avoid volatility, and it certainly doesn't mean that this is a guaranteed home run. There is no guarantees when it comes to the stock market. So again, that's why we use the weight of the evidence to really determine, are the signs, are our indicators telling us that that the market's headed in the right direction, and that we need to participate in this market as opposed to staying super conservative. So all in all, everything looks pretty good. So in wrapping up, the weight of the evidence does suggest that the market is healthy and moving in the right direction. And so sometimes you have to turn off the television, ignore some of the noise out there, stay focused on the goal of following the trend. But if you have any questions, give me a shout, and I'll see you on the next Markets in 5.